Hello, welcome to Latest Wealth.
I am Kailash here, financial advisor and as well as wealth coach.
My dear friends, we have been discussing about the fundamental analysis. Earlier, we learned in online classes 8 classes. Now this class, we are going to learn about understanding balance sheet. This is a part 1 of balance sheet. Let us go. My dear friends, keep annual report ready in your hands. When you are keeping annual report, we will be referring number of times so that it will be very useful. The balance sheet equation. While the profit and loss statement gives us information pertaining to profitability of the company, whereas the balance sheet gives us information pertaining to assets, liabilities, and shareholders' equity. The profit and loss statement, as you understand, discusses about the profitability for the financial year under consideration. Hence, it is good to say that the profit and loss statement is a standalone statement. The balance sheet, however, prepared on a flow basis. That means it has a financial information pertaining to company right from the time it was incorporated. Thus, while the profit and loss talks about how company performed in a particular financial year, whereas the balance sheet discusses how the company has evolved financially over the years. Now let us look at the balance sheet of Amara Raja Batteries Limited. Please refer page number 72. Keep it ready with you. Just see the page number 72. Here it is the balance sheet. Now you can see the balance sheet contains details about the assets, liabilities and equity. In earlier class we discussed about assets. And we discussed about assets, that both tangible and intangible assets owned by the company. The tangible, intangible. Now, asset is a resource controlled by the company and is expected to have an economic value in the future. Generally, typical examples of assets include plants, machinery, cash, brands, patents, etc. Generally, what happens? Assets are of two types. One is current and non-current. We'll discuss afterwards. Now let's come to liability. Liability on the other hand represents company's obligation. The obligation is taken up by the company because the company believes these obligations will provide economic value in the long run. Liability, in simple words, is the loan that the company has taken and it is therefore obligated to repay back. The typical example of obligation include short-term borrowing, long-term borrowing, payments due, etc. Liabilities are of two types, namely current and non-current liabilities. We'll discuss about all kinds of liabilities afterwards in this class. Any typical balance sheet, my friends, the total assets of company should be equal to total liabilities of company. Very simple. That means assets is equal to liabilities. Now the equation above is called balance sheet equation or the accounting equation. In fact, this equation depicts the key property of the balance sheet. That is, balance sheet should always be balanced. In other words, assets of the company should be equal to liabilities of the company. This is because everything that company owns has to be purchased either from the owner capital or liabilities. Owner's capital is the difference between assets and liabilities. It is also called as shareholders' equity or net worth, representing in form of equation. For example, if I show like this, shareholders' equity is equal to assets minus liability. Now let us go on shareholders' funds. As you know that balance sheet has two main sections, that is assets and liabilities. The liabilities, as you know, represent obligation of the company. The shareholders' fund, which is integral to the liabilities side of the balance sheet. Actually, it is just look here. Many people find this term little confusing. Please understand very clearly. If you think about it, on one hand, we are discussing about liabilities which represent the obligation of the company. And on the other hand, we are discussing shareholders fund which represents shareholders wealth. This is quite counterintuitive, is it not? How can liabilities and shareholders funds appear on the liabilities side of the balance sheet? Let me tell you, my friends. After all, shareholders fund represents funds belonging to shareholders, which is in true sense is an asset and not really a liability. Correct now? You may argue. Let me tell you, to understand this, just you have to change the perspective. You have to change the way of thinking. in which you look at the company's financial statement. My dear friends, think about the entire company as an individual whose sole job is run its core operation and to create wealth to its shareholders. By thinking this way, you are in fact separating out the shareholders, which also includes its promoters, and the company with a new perspective. Now think about the financial statement. You will appreciate that the financial statement is a statement published by the company which is entirely different from the owner. So, to communicate the world about its financial well-being, this means that shareholders' funds do not belong to the company, as it rightfully belongs to the company's shareholders. Hence, from the company's perspective, the shareholders' funds are an obligation payable to the shareholders. Hence, this is shown on the liability side of the balance sheet. Now, the liability side of balance sheet. The liability side of balance sheet details out liabilities of the company. Within the liabilities, there are three subsections. One is shareholders fund, two is non-current liabilities, and three is current liabilities. The first section is shareholders fund. Now let us understand. To understand share capital, think about an imaginary company. Just think about an imaginary company issuing shares for the first time. Imagine company XYZ issues 1000 shares, with each share having a face value of rupees 10 each. The share capital in this case would be 10 into 1000, that is rupees 10,000, face value into number of shares. Now here in our case, that is ARBL, Amara Raja Batteries Private Limited, the share capital is 17,081 crores as they have published in the balance sheet, and the face value is rupees 1. Get the face value from NSE website. You can get the face value from NSE website or BSE website. Now refer page number 72 once again. Now you can use face value and share capital value to calculate number of shares outstanding. Now we know share capital is equal to face value into number of shares. Therefore, number of shares is equal to share capital by face value. Hence, in the case of ARBL, number of shares is equal to 17 crore 8 lakh 10,000 divided by 1. That means 17 crore 8 lakh 10,000 shares. The next line item in the liability side of balance sheet is reserves and surplus. Reserves are usually money earmarked by the company for specific purpose. Surplus is where all the profits of the company reside. The reserves and surplus of ARBL stands at rupees 1345.6 crores. The reserves and surplus have an associated note, number 3. Let us look into the same. Please refer note 3. That is page number 81. As you can notice from the note, the company has earmarked funds across three kinds of reserves. 1. Capital reserves, usually earmarked for long-term projects. Clearly, ARBL does not have much amount here. This amount belongs to the shareholders but cannot be distributed to them. 2. Securities or securities premium reserve account. This is where the premium over and above the face value or par value of the share sits. ARBL has a 31.18 crores under this reserve. 3. General reserve. This is where all the accumulated profits of the company, which is not yet distributed to the shareholders, reside. The company can use the money here as a buffer. As you can see, ARBL has a rupees 218.4 crores in general reserves. The next section deals with the surplus. As mentioned earlier, surplus holds the profits made during the year. Couple of interesting things to note. At present, last financial year 13 balance sheet, the surplus was 829.8 crores. This is what is stated as the opening line under surplus. Now just look here. The current year, financial year 14, profit of rupees 367.4 crores is added to previous year's closing balance of surplus. Few things to take note here. More you practice, more easy it will become. Please remember, my friends, enjoy the process first. Now let us go point by point. Notice how the bottom line of profit and loss is interacting with the balance sheet. This is actually very important point. This highlights very important fact. All the three financial statements are closely related. Now notice how the previous year balance sheet number is added up to this year's number. This highlights the fact that the balance sheet is prepared on a flow basis, adding the carrying forward numbers year on year. Now previous year's balance plus this year's profit adds up to rupees 1197.2 crores. The company can choose to apportion this money for various purposes. The first thing a company does it transfers some money from surplus to general reserves so that it will come handy for future use. They have transferred close to 36.7 crores for this purpose.
My dear friends, hope you have enjoyed this session. Hope you learned wonderful things which will help you to invest better, and step by step we are proceeding. And please remember, enjoy the process. More you enjoy the process, more wonderful returns you are going to get. Enjoy the process, enjoy the life, be wealthy. Till we meet again, enjoy every bit of life. And Krishna Kailas is logging off. Thank you. Let's meet in next class. Bye bye.